Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka. What a great week it has turned out for the equity markets. A sixth straight week of gains. The Nifty has conquered the 21,000 mark, even before year end. And, if you look at the sectors, energy as well as banks, these two pockets did extremely well, at least on a weekly basis. So the Nifty index itself is up over 700 points, this week. 3.5% kind of gains coming in on the benchmark index. And if you look at the Nifty Bank index, that has been, rallying on a daily basis. Today, in fact, it was up and about, even though PSU banks didn't do all that well. But Nifty Bank index reclaimed that 47,000 mark today, and for the week the index has gained somewhere around 5% or thereabouts. We had the RBI monetary policy today, where the RBI stuck to the script, no negative surprises, but of course there was a positive surprise given the fact that growth figures for FY24, the estimates have been revised higher to 7% vis-a-vis 6.5%. Of course, the street was working with a 20 to 30 basis point kind of upward revision, but what the RBI doled out was a 50 basis point revision, and that was a pretty good takeaway from the RBI policy. Mid and small cap indices cooled off from the day's high today. So both the mid and small cap indices ended in the red for the day, but for the week the mid cap index is up somewhere around 2%, and same goes for the small cap index. For the day, the Nifty, as I said at the start of the session, managed to hit that 21,000 mark, but cooled off from highs and ended around that 20,960 level or thereabouts. Some bit of profit booking kicking in at highs, given the fact that the breadth was in favor of losers today. Aside of that, if you look at some of the pockets that didn't do all that well today, under selling pressure were the likes of autos, FMCG, pharma, metals. All of these pockets were in the red towards the end of the session. Adani group of stocks had a stellar run throughout the week, in fact for a couple of weeks now, but came under some bit of profit booking today. So all the Adani group stocks ended the day in the red. Among the Nifty gainers for today, we had the likes of JSW Steel, HCL Tech, Titan, Infosys, as well as HDFC Bank. And on the losing end, we had the likes of Adani Ports, Hero Moto, Bajaj Finance, M&M and BPCL. Talking about the broader end of the market, some of the stocks that were in focus were GMR Airports. Now, this stock gained somewhere around 13 to 14% after a block deal in the counter, wherein 12% equity changed hands. And, sources suggest, in fact, CNBC TV 18 sources suggest that a non-promoter entity was a likely seller in the block deal, and GQG could have been buyers in the block. Aside of that, we had block deals in the likes of Zomato and Five-Star Business Finance as well. So these stocks were also in focus today. But Sugar Pack, continues to remain in focus. We saw another sharp plunge coming in on names like Praj Industries, Balrampur, Chini, Shriram, Renuka, etc. Given the fact that the government has curbed ethanol output in order to boost sugar output. So, DAM Capital expects an earnings impact of somewhere around 10%, for some of these sugar stocks, which is why the stocks have come under pressure. On the Nifty 500, we had, of course, GMR Airports, as I mentioned. Brightcom was another mover. Nifty, Infibeam, I beg your pardon, Indiabulls Realty were some of the other movers. On the losing end, Praj Industries, clocked in a double-digit loss. Sri Renuka, Adani Energy, Adani Green, some of these stocks that have run up quite a bit from the Adani group under selling pressure today. But on that note, let me bring on board my guest for today. Joining me is Vinit Bolinjkar, who's the head of research at Ventura Securities, joining in. Great to have you on the show this afternoon, Vinit. When you look at the index levels, you are left with a feeling of disbelief because, around Diwali, when I spoke to a lot of experts, they were predicting 21,000 kind of levels for next Diwali, right? But then looks like it's early Christmas at the current juncture. But all the headwinds sort of out of the way. If you look at FIIs, they have turned into buyers. We have oil cooling off quite a bit. We have global yields also cooling off. Political uncertainty, of course, out of the way. Going forward, what is that one risk that you see to this rally? Do you think valuations could be that risk?
I don't see valuation as a risk to the story because the earnings growth is very, very strong, and all because of all the tailwinds from the triggers that you just pointed out. My worry is only on a global basis where, clearly the debt is unsustainable and getting out of hand. So that will remain a worry for me to always be on the watch out for. And then what happens is if that veritable worry plays out, then you have we employ a large number of people in the tech space who are very, very well paid compared to the rest of the sector. And if that kind of snowballs, then we could have some temporary hiccups before the after effects of consumption slowing down and all take effect. So if we have a hiccup in the US with the tech stocks, it could software services especially, it could have a bad effect on India, and that could impact consumption. So that is the only risk factor for me. But apart from this, I think we are on a roll. The sale winds are in our direction favorable, and I'm seeing, if you go out on the street and really watch the industrial sector, you will find that there is massive activity happening in terms of
Well, I think there's some audio issues or some issues with the link. As Vinit was mentioning, the only risk that he sees at the current juncture, is some bit of, a weakness if that could come into some of these tech stocks. But aside of that, we are on a roll. That's what he was even mentioning. And, I would just be, let me ask my producer, are we back? Okay, so he is. We are still trying to figure out the link, but as I was mentioning about some of the stocks that were in focus today, sugar as a pack. Vinit, can you hear me? Is my voice reaching you, Vinit?
Yes, I can hear you loud and clear.
All right. So you were mentioning about
Yes, absolutely.
Right. So let me ask you: would you be worried about the mid cap valuations, if not the large caps? Because they have run up quite a bit, and if you look at the November Amphi data that has just come in a while ago, there's still a lot of exuberance when it comes to the mid and small cap funds vis-a-vis the large cap funds. But do you think the focus will now shift to large caps, given the fact that most of these names, even for private banks, Reliance for that matter, they haven't really participated in a big way yet? Do you think that portfolio rebalancing, could happen in the next couple of months, and the focus will now tilt towards, or the preference will now tilt towards large caps?
The large caps have to be better valued than the mid cap and the small cap. But the kind of growth that we are seeing in the mid cap and small cap, that is phenomenal. And hence, what I believe is that the allocations that come in from the SIPs is going to get equally spaced out in favor of large cap, mid cap, and small cap. So, it's not going to be either or. I know it has been more mid cap and small cap at this juncture, but I see it leveling out across all three segments because the growth is also catching up in the large caps now.
That's true. Also, anything that you would prefer, at least from the large cap private bank names like HDFC Bank, ICICI Bank, Axis Bank. Any preferences?
So I think HDFC Bank will see a lot of back-ended growth come back. So we've seen because of the merger with HDFC and HDFC Limited, the growth kind of plateau. And we believe that the mojo will get discovered by the fourth quarter of this year. I expect that the run rate of its historical growth rate will pick up. And that is when we will see this bank get repriced. So compared to ICICI and Axis, Axis has been a star performer among the three. And HDFC Bank has severely lagged. But I expect that this will give you very good appreciation along with SBI Bank.
Right. PSU banking pack, the PSU banks are yet to play catch up with private banks when it comes to, valuations. Do you think that valuation gap will be bridged pretty soon, given the fact that, amid hopes of policy continuity, PSU stocks have still, seen a good run despite the fact that they have already run up quite a bit. So do you think that valuation, the bridging of the valuation gap will happen pretty soon?
It's a work in process, and it will only accelerate given that the market sees a third term of the Modi government play through. So I think that rotation from large cap, see right now the private sector banks are doing very well. Once they reach a certain level, you will find that money flow into the PSU banks, and then they will catch up.
Right. I also want to get your thoughts on Paytm. Of course, we saw a solid crash coming in on the stock, 20%. That's the kind of reaction we saw yesterday. The company has, of course, got exposure to sub 50,000 rupee loans, and it's expanding its high value, high value loans. Sharp cuts in price targets as well as earnings estimates by global brokerages as well as domestic brokerages, but there are no sell calls, so to say. Still, what should investors really do with this particular stock now? Because this overhang is expected to continue for some time, right?
Yeah, but I think it's also a bit overdone at this point in time. Paytm can switch its business model. They're quite robust. They will tinker with their business model, and whenever you have these abrupt decisions being taken when your coalition partners are suddenly stopping the buy now pay later kind of products, going very on that because of uh, the RBI diktat on risk weights going up out there. So they will have to recalibrate their model. It will take a little while, but we expect that this will come back eventually.
Would you say the same for Bajaj Finance, AAA rated NBFC? Cost of funds expected to go up, but the fact that it borrows more from the bond markets rather than banks, and also the fact that there's still, we're still awaiting resolution on the RBI ban on two products. But do you think it's going to bounce back pretty soon, Bajaj Finance?
I think Finance has been a stock waiting to rally for quite some time now. And give it one more quarter, and I think it will come back up on its own. It's a very, very strong and a robust business model, difficult to replicate and difficult to even execute. So give it some time, and this stock should be firing out.
All right. Also, sugar pack has been in focus. Government has put curbs on ethanol production. Of course, sugar companies were spending or investing quite a lot to up their ethanol production, right? But now, of course, with these curbs in place, as I was mentioning at the start of the show, DAM Capital expects a 10% kind of impact on earnings. So, for people who are invested in the sugar stocks, how should they approach or what should their strategy be going forward?
I think if you have not sold out, then you should have tight stop losses in place because sugar is a commodity. And when commodities get sold, they get sold one-sided. Internationally, oil prices are suppressed, sugar prices have fallen, and you have a little bit of impact out here. And what happens is that for a sugar company, the sugar production drives the profitability. So it's a kind of a little tricky situation. But I think that not being in an uncertain environment is the best way that you can help yourself and play it out. As I always tell investors that there are so many growth stories that are there in the market. There are so many themes out there. Why get into a theme which is negative? So book your profits. We've seen a very extended run. Book your profits and get into other sectors which are extremely in the limelight. So I think infra space, manufacturing, capital goods, and chemicals are also bottom fishing up. Pharmaceuticals, these all look very, very good to my mind. Obviously, you cannot leave out PSU banks and the private banks.
What about the IT space? What's your view there? Because second half of FY25 is when Street is expecting some bit of recovery to kick in. And would you say this is an opportune time to look at IT names as well? And if yes, mid caps or large caps?
So we have been wary of IT stocks for a very long time. We continue to be wary, primarily because the mother market for IT is the US, and they're extremely exposed vis-a-vis a negative dollar. So, given that kind and the inflationary impact and the general slowdown that we are seeing, I'm not very, very convinced on buying IT stocks. I still keep it out of my repertoire, and that's how we continue to be on that. But within the software services, I think the software services is a sunset industry, and you should be focusing more on the products and very specialized applications to play. So it's not bottom up. It's not a top down kind of investment thesis. You have to really dig into the IT, find your specific place, and then venture out with them.
Right. Last couple of questions. What's your sense of the recent listings, the blockbuster ones, so to say, the likes of Tata Tech, Gandhar Oil, anything catching your fancy there? Also, any views on Honasa Consumer? Because Jeffries has come out with a very bullish report. 530 is the kind of target it has pegged on the particular stock. But do you think it has, the potential to reach that level, given the fact that, we've seen some stake sales and there are risks of more stake sales by at least AIFs who are not under any lock-in. So do you think that, repetitive stake sales would keep Honasa under pressure in the near term?
So selling will keep the stock under pressure, but once the 1 or 2 quarterly results come out now, then you will realize that this is the one of the best stocks to buy in the consumer space. Very bullish on it, very aggressive growth, margin expansion going from negative to positive, and all said and done, valuations are very cheap. And you have 3 brands which are 150 crores plus, one brand which is 1,000 crore plus brand, and valuations for these kind of companies need to be out there in line or premium to the established players. So at 6 times sales, I think this stock should be at 10 times sales, at least in line with the rest of the sector. And when you have a 30% growth, you can do the math, and you can see that you could potentially be sitting on a multi-bagger.
And Tata Tech, what's your view there?
Tata Tech is run up too far, too fast. We put in our best estimates in our models, and we had come out with a target of around 975. It's $300 higher, and we need to get some kind of guidance from the management when they expect that $1 billion kind of revenue. We've assumed FY27 in our model. If it comes earlier, then it might get re-rated slightly higher. But clearly, it's a little expensive. But it's a Tata, and it's in a very, very niche space in the EA and RD's sector. So it might continue to have a premium out there.
Right. Also, any advice to investors as to how they should navigate this leg of the bull run, at least from now till about the general election, say till about May?
See, I think the elections, the state elections did spring up a surprise, caught the market truly by surprise, and played out the story the way it is. We believe that, you should now not be doing chasing momentum, but you should switch your strategy to be a little bit defensive and growth oriented, while at the same time calibrating your risks. So, as I mentioned to you, a number of sectors that we like, we think that the PSU sector is fairly undervalued, and especially the power finance companies look very, very good.
All right, that's the view then. With that, Vinit, thanks a lot for taking out time and sharing your thoughts with us. A great chatting with you as always. Well, with that, we've come to the end of this edition of Closing Bell. Of course, a great week for the stock markets. Let's hope that the momentum continues when we come back on Monday morning. But for now, it's a goodbye from me. If you have any comments, leave them in the comment section below. And of course, come back and join us Monday morning when we come back with the markets. Have a great weekend and stay safe. Thanks a lot for watching.